To the union budget, which has been dominating headlines for the last few days, a strong push coming in for India's startup and deep tech ecosystem. The government has doubled its commitment to the fund of funds for startups, adding another 10,000 crores to fuel high potential ventures. So far, AIFs for startups have received investment commitments of more than 91,000 crore rupees, and this latest injection aims to sustain that momentum.
Right, Ritu. Artificial intelligence is another major focus of this budget, with 500 crore rupees allocated to an AI Centre of Excellence and the establishment of 5 national skilling centres. The budget also introduced a deep tech-focused fund of funds with an allocation of 20,000 crore rupees designed to accelerate advancements in critical technologies such as AI, quantum computing, semiconductor research. Now, to further support startups, Nirmala Sitharaman also announced an enhancement of the credit guarantee scheme, and for MSMEs struggling with working capital, a new 5 lakh rupee credit card scheme aims to provide short-term liquidity support.
And that's not all. A new initiative targeting 5 lakh women entrepreneurs from scheduled castes and scheduled tribes over the next 5 years was also announced in the budget, facilitating term loans of up to 2 crores. But for more on the significance of this for the startup ecosystem, we have with us Siddarth Pai, who's the founding partner of 314 Capital, and Bhaskar Majumdar, who's the managing partner of Unicorn India Ventures. Bhaskar, Siddarth, thanks very much for joining us here on Startup Street. Siddarth, let's start with you on how effective you think the original fund of funds has been in easing the funding crunch for startups. And now with the government doubling down on this, how much do you think will actually trickle down to these early stage founders?
That's actually a fantastic question. The original SIDBI fund of funds has been the nucleus around which a large amount of rupee capital formation has actually happened. If you actually go by the numbers, less than 15% of the capital being raised by Indian startups actually comes from Indian sources as of now. The entire Indian startup industry is actually overly contingent on foreign capital coming in to end up fueling their M&A, fueling their growth, fueling their expansion, their marketing, as well as all their operations for that matter. I think what the Fund of Funds has actually done is the Fund of Funds is one of the first initiatives by the government to end up increasing rupee capital participation. The numbers speak for itself for that matter. The IRR on the investments is roughly about between 21 to 22%, which is far higher than what the stock market is actually given, disabusing everyone of the belief that the private markets can't end up actually generating returns. Number two, we've actually seen that the rupee capital formation happening through AIFs is actually enthusing a large number of startups to flip back to India to end up raising funding and then to end up actually tapping the markets as well. Out of the last few growth rounds that happened in 2024, the vast majority of them, for that matter, ended up actually coming from Indian family offices as well as Indian funds. So it's fantastic that the government has reaffirmed its commitment to Startup India by actually going back to this tried and tested program. And hopefully the scope of this can end up actually increasing, and we'll end up seeing a multiplier effect of 9x, the same way that the previous fund has actually demonstrated so far.
All right, so it's a big thumbs up, Siddarth. Coming across to you, Bhaskar, this is Shruti quickly stepping in. Let's talk about deep tech. The world is no more looking at India as merely the hub of IT and IT services, with Chandrayaan launched for $150 million. The world is realizing that India is the hub of low-cost tech innovation. Also, China is changing the rules of the game with DeepSeek. What kind of a boost will the deep tech fund of funds provide to Indian deep tech startups to get ahead in the global AI race?
You're absolutely right, Shruti. Over the last, I think about a couple of years, the move has been already towards deep tech by the Indian VCs. And no doubt this fund of funds is going to be a big boost towards that. Not only is the fund of funds a boost, already some of the government initiatives earlier, like the PLI scheme and especially the DLI scheme that they launched has been working very, very well. So we've got a number of startups within the semiconductor space where, along with the initial equity put in by the seed and early stage investors like us, the DLI grant sits in very well and enables these companies to grow up. And again, something which is not well known in the general public is there is now a strong patent framework that is starting to take place within the whole Indian startup ecosystem. So this triangulation of this global macro towards a China plus strategy, monies coming in both from the VCs and now from the fund of funds, plus, a patent framework will definitely lead to an overall boost in the whole deep tech environment going forward.
But Bhaskar, this 20,000 crore deep tech fund, it is strong intent, But how do you see it being structured? I mean, is it likely to have direct equity participation or co-investment alongside venture capital companies like yourself?
It's the jury is out on that, and obviously we'll have some clarity within a few weeks and months. But I think the fund of fund structure, which Siddarth alluded to earlier, has yielded result, and the government has rightly realized that investing direct is not the government's job. It is for professionals like Siddarth, me, and others in the ecosystem, because we do this for a living. So my gut is it would be a sort of a fund of fund structure where they would invest in deep tech funds or funds which have a deep tech allocation to go ahead and do it. So my gut is it is not going to be a direct structure. Co-invest, I think first the SIDBI fund of fund will start doing co-invest, and they've been talking about this for some time. And from the IVCA, we've also been pushing it. So once that sort of happens, I guess it will come to the deep tech side.
All right. Siddarth, let's talk about the credit guarantee scheme expansion to 20 crore rupees. It is a big move, especially for capital-intensive startups. But will this really move the needle for early-stage ventures that struggle with working capital and collateral requirements?
No, I think this is a fantastic step forward. I think every startup, they actually tell you the hardest round they raise is not the last round, but it's the first round of debt they end up actually getting. I think the banks have actually been fairly muted spectators about the entire startup revolution that's happening. And that's in no part because of the RBI norms that actually require you to end up having hard assets, you to end up being profitable for that matter. All of these end up actually failing when it comes to the new age economy and startups. So I think the government's move to end up having the credit guarantee scheme has allowed a number of banks to end up exploring smaller credit exposure to these startups, allow them to build up a credit score, and then thereafter end up actually giving them more credit when time is actually needed. If you notice, the average percentage held by a founder when they end up going to list is normally in the higher single digits or lower double digits. If you contrast this with the US, where the founders end up owning anywhere between 25 to 40% of their companies at the IPO, we've seen that the dilution effect on Indian founders is large. The dilution effect is large because debt does not play a very, very large role in the capital structure. I think with the credit guarantee scheme, and hopefully they end up increasing it over time, these startups can end up actually raising debt capital for working capital, rather raising equity, hold on to a higher stake, and end up actually generating more value for themselves and the shareholder.
Well, that's an interesting point, Siddarth, and we hope to see more banks also coming forward with this. We've talked about the funding part, but the government has also extended, for instance, the period of incorporation for startups by another 5 years. So beyond this access to credit, what more could the government have done to support startups, you think, in the budget, particularly when we talk about regulatory ease or tax incentives?
No, I think the first thing the government should have done is to actually demolish the IMB, the Interministerial Board. I think India has 1.5 lakh DPIT registered startups as of now, but less than 3,000 of them have gotten any of the tax benefits stated by the government. This is the tax holiday of 3 out of 10 years, the ESOP tax deferral that the government also promised, and the ability to carry forward your losses when there's a change in shareholders. It is harder for a person to end up getting an IMB certification than it is for them to pass the CA final exams or for them to get into IIT. I think the government was serious about democratizing these tax incentives to a larger set of startups. They should start by removing the IMB. We can't have a group of bureaucrats or a group of people who don't have skin in the game to decide who's innovative or not and decide who gets the tax benefits that are actually stated. So I think if the government had done that, that would have been fantastic. Deferring the period of incorporation to 2030 doesn't end up solving the issue. It just gives a longer period of time for a larger number of startups to get denied the tax promises that they were promised by the tax benefits they were promised by the Prime Minister all the way in the year 2016. So I think if that change had happened, it would have been fantastic for the startup ecosystem. But we're hopeful that the government will end up actually looking upon it kindly, maybe in the next budget or so.
Absolutely, and we'll surely keep a track of that, Siddarth, and thank you for those insights. Bhaskar, moving away from budget for a bit, Unicorn India Ventures is currently releasing its 1,000 crore rupee Fund 3. So far, the fund has raised over 500 crore rupees and is expected to reach its final close this year. With this fund, you aim to build a portfolio of 20 startups that are focused mostly in the deep tech sector. What sub-segments will you be looking at, Bhaskar?
So you're absolutely right. We are, I guess, close to 700 odd crores now, or 750 crores, and we would be looking at the final close by April or May this year. We already have created a portfolio of 12 to 13 companies, of which I guess about 8 or 9 of them are in the deep tech. within deep tech, deep tech is a very loose terminology as such. And the way we view deep tech is anything that is outside of consumer internet and primarily pure SaaS businesses and platforms. Fundamentally, where there is a patentable IP, that's how we sort of define deep tech. And within that, we've invested in robotics business, we've invested in a space tech business, we've invested in a fantastic semiconductor, AI chip design business, and we're looking to invest in a couple more in the mobility space. So broadly, these are some of the sub-segments we are looking at. Of course, with the huge change in the nuclear pact and of the government, that's another sector which will mushroom up definitely, and we are also keeping our eyes on that.
All right, on that note, Bhaskar and Siddarth, thank you both very much for helping us pass through the relevance of this budget as far as the startup ecosystem is concerned. We appreciate your time here on Startup Street. Thank you.
Thank you very much, guys.
On that note, it's time for us to head into a short break. But coming up, autonomous robotics firm Ati Motors has backed $20 million to expand its product offerings and enter new geographies. We put the firm's founder on the hot seat to find out more. Stay tuned.